to the inflation live. A very, very significant, crucial US release once again. I'm going to quickly share my screen right now because it seems that the market has talked and we have seen a reaction from the dollar, a significant actually boost of the dollar against the rest of the majors. Over here I have the euro dollar in a 30 minutes chart. As you can see, 30 minutes chart in dollar, you have seen that on the announcement of the US inflation just now we have seen a significant boost of the US dollar. So very briefly, just to let me share with you the stats. So basically, we had a significant, okay, it seems tiny for some, but we had a growth, so a rise, more precisely, for the headline, the yearly basis in inflation, and also the monthly, excluding the food and energies. If food and energies is included, also we have an increase. So inflation has been posted at 0.4% against the 0.3% expected. You can see a rise once again of the inflation. And the headline also rose by 3.8% from the 3.7% expected. So guys, pretty much just to simplify all this, you might hear us and hear everywhere and read everywhere that overall we have faced for more than a year now a stubbornly high inflation. So this is once again a sign of a stubbornly high inflation, which, to be honest, it was a bit expected if we consider the NFP last week, the GDP, the latest GDP figures, the retail sales, the inventories, the higher oil prices. All these led to the expectations to show a stubbornly high inflation, and this is indeed the case. We have finally confirmed whether indeed all the latest figures that we had from the US economy were leading to a stubbornly high inflation. So as usual, it's a live analysis, so feel free to ask anything you want. I'm here to help. I can see that Kaone asking whether to buy or sell. I cannot advise you what to do. I don't know what kind of trader you are. I don't know anything about you, to be honest, dear Kaone. I don't know your strategy if you're following one. I cannot really advise, but I will try to do my best to provide you a fundamental and technical analysis which will help you taking a decision of your own. Okay, so this is just to highlight at this point that this is a euro dollar in a 30 minutes chart. So I'm gonna zoom out, and then actually I'm gonna jump to the 4-hour chart just to show you that the previous high that we have seen actually last Thursday, it was already rejected, broken. So the asset has broken the 108 territory, round number, with the intraday setup over here, with my intraday indicators pointing that there is an increasing selling pressure. So you can see that it quickly, just in the last, not even 30 minutes, 4 minutes since the release, 4 minutes since the release, we've seen that it quickly returned back to February's over here support territory. Key obviously will be whether this turn lower will continue. Now we're gonna obviously you need to wait a bit for the market noise to calm down a bit, at least this candle to close. However, the higher inflation, what it confirms, it pretty much confirms that the Fed needs to do absolutely fine, nothing, sorry, for the moment. They need to be patient. They need to keep the rates unchanged for a while until we have the data indicating that it's time to ease the policy. So for the time being, the data for sure are not helping the Fed to take action. So it's a wait and see stance from the Fed. This is what expected, at least from after the today's inflation reading. So higher for now interest rates and the policy and change for a while is what is it has seen to boost the dollars against the other major currencies. Have in mind, and for the next few days, the next few weeks, even the next few months, because right now I'm sure that the Fed watch tool will probably change, uh, and we might see significant decline on the Fed Fund futures for June's interest cut. So remember that the scenario so far, it was that we're gonna have a rate cut in June, okay? With and actually that scenario, the odds actually detected significantly the last 2 weeks. So now that scenario will actually the June meeting expected to provide an unchanged policy, to present an unchanged policy, and that could postpone further the interest rate cut. If you are with us, I mean, and you were watching our live analysis, like on last Friday, I have presented an FP. Michalis presented on Tuesday another live analysis for you, more precisely for gold, etc. So if you are following us and watch our lives, you might already know that the Fed and the central banks are the key drivers of the forex majors, especially the last 2 weeks, the end of the March and the end um, the end of March and the beginning of April. Now, I'm gonna quickly turn to Idu question regarding gold, because gold it has been the spotlight. That actually has it's been the hot potato, if we call it, of the whole year. Oil and gold, but gold for sure is dominating the headlines, is dominating the attention of all the market participants. It has posted several record highs so far. So such a reading is something that is responsible for this pullback that we have seen on gold because of the strong dollar. Nonetheless, however, I'm going to highlight at this point, because this is the daily chart, okay? Daily chart on gold. This pullback, just the last 8 minutes, 8 minutes already, this pullback is not changing for the time being, guys. The wrong rally that we have seen for gold is not changing the overall outlook, positive outlook for gold, and we haven't even seen any overbought conditions in the medium and long term. I'm highlighting this for gold. Okay, so a reversal can be seen if and only if, from a technical perspective, we see at least a return back to the 2270, or even 2270 territory, or even lower. Okay, this could indicate a reversal of this February, March, more than 2 months rally. Okay, Why I'm clarifying, first of all, the medium and the long term picture? Simply because the goal has not been supported only by the central banks, especially in 2024. It has been well supported by also geopolitics, by Chinese, but not only Chinese, I will say by central bank increasing buying activity as well. Okay, so the gold, the driver of gold is the uncertainty that there is in the market in general regarding the economic growth in the globe, the geopolitics that add further safe haven flows into the gold, but also the inflation and the significant, even massive buying activity from the central banks, especially from China, is something that I keep repeating and repeating at every live analysis regarding gold. Now, let's zoom in. By the way, before I close with gold, at least in the daily chart, have in mind that if all this situation continues, okay, um, there are a lot of forecasts out there. I was from Barron's. I've seen a post in Bloomberg as well that they suggest that if all these uncertainties, if all this the situation with the geopolitics continues, if there is continuous uncertainty regarding the central bank's actions in regarding uh, um, to the inflation, to high inflation, etc. If all this continue to support safe haven flows, we might even see gold going back to 1980s, okay, 1980s levels. So back in 1980s, if we adjust inflationary adjust the peak back in 1980s, then the gold is expected to kick $3,000 level in today's dollars. So back in 1980s, we didn't really breach 3,000, but if we adjust the price, the peak back then into today's dollars, okay, that will mean a breach of three and a rally up to 3,000 territory. This is a long term, okay, forecast, and if and only if we keep having a safe haven flows into the gold for all these reasons, and if we see further uncertainty around the market coming out from anything, from elections, it may come from elections, for trade relationships, from ongoing wars, from, I'm not saying that it's only about central banks, but having in the back of your head, and also rely on your technicals, right? Put some support levels, keep an eye on them, keep an eye on any breakouts. Obviously, a significant breakout, a significant level, at least to the upside, it will be the last 2 days highs, basically the latest record high. While on the backwards down and backwards breakout, and more precisely the 2270 that I pointed out over here, which is the 131 Fibonacci extension, and that is a sign of a complete reversal of the 2 months trend. That would be a bearish indication. Now, I know that most of you are intraday traders or scalpers. You don't really care about daily. So let me go down and do a quick intraday analysis in regards to the gold. So just let me zoom out a bit. Okay, this is a nice round top, which you guys need to wait until it's fully formed and closed and confirm. Okay, so that candle need to close. Actually, it will be closing 15 minutes from now. So what you need to have to check is whether this candle will close below the this latest this neckline. The By neckline I mean the bottom of the rounding top, because something like that could give a confirmation of further decline in an intraday basis for gold. Gold 1 hour chart. By the way, this looks to me like an incline, a head and shoulder into an incline. Sorry, let me check. So, okay, let me connect the highs. Not precise. Okay, not precise. No, ignore. It's not a head and shoulder formation, an incline head and shoulder formation. So it's not there, but for sure we have a possible rounding top, which, if it confirms, could indicate the retest of 2300 territory round number, which are the support levels of the day. Moving average are crossing are moving further to the downside, have bearishly crossed in the beginning of the EU Open. Okay, so let me have the appropriate intraday setup. Okay, here we are. RSI keeps pointing down. Stochastic has posted a bullish cross. However, we need to wait and see how this candle will close. I will get back to gold in a bit, okay? In a bit. Let's, what are, thank you very much, Shashan. Thank you very much. What are my to do now? Marvelous Suzuka, what are you talking about? Sorry, how can I help you? It's hopefully nothing bad happened, but so dollar is going down. Which one to go for dollar? Let me check dollar. Let me. Ba, ba, ba. Where's my dollar? Sorry for that. Let me open my dollar index. Feel free to ask anything you want, guys. Asset, the question regarding fundamentals, something that you don't understand, anything. I'm here to help. Here it is. I don't know why Jeremiah is going down. Okay, it was in the beginning, I guess. It was the very first few seconds of the release. I want to go for guys, fundamentals is what I said. Fundamentals, the release, okay, the release suggests, but basically postpones further the rate cut from the Fed. Why? Because in a year that, you know, the rate, let's take it from the very beginning, okay, just to explain a bit the central banks. If in order to the central banks, in order to support the economy from the pandemic and from all these things that happened. It was a pandemic, it was the war, it was the trade relationship between the US and China. in order to support, it was the supply chain disruption. Remember, supply chain disruption, high oil prices, high iron prices that we have seen since the pandemic. In order to support it, a, a tool that they have in order to support the economy is to increase interest rates, right? And this is what they have done. They increase interest rates in order to control the economy, and they have increased in interest rates a lot in order, as an effort to stabilize the economy, global wise, not only the Fed. But now, um, okay, but such higher interest rates, okay, tends to a slowdown of the economy. So the Fed and in general the central banks, they don't want the slowdown of the economy to lead to a recession. So in order to avoid eventually a recession, they start cutting down the rate slowly. However, even only if they have substantial proofs that indeed it leads to a recession. Right now, we don't have this. We have really high interest rates, but growth at the same time, which it doesn't make sense. Okay, so that's why dollar is supported. Dollar is supported because based on the data, the central banks will not try, let's say, will not cut rates in order to avoid, in order to, let's say, in order to stabilize a bit uh, the economy, in order to be in line with higher interest rates. So they cannot do that right now, and that is giving a boost to the dollar because higher for longer interest rates imply appreciation of the currency for that country. In this case, is the US dollar. Postponement of the rate cuts supports the dollar and makes it stronger against other currencies. However, we need to wait and see whether this first impression, this first reaction, will sustain. From a fundamental perspective, it should sustain. However, we need to see whether indeed the market participants are all in line with support of the US dollar. Even though, as you can see, since the whole March, it was well supported exactly for that reason. Because even though at the beginning we were expecting a rate cut in the first quarter, didn't happen, postponed further. Then we were waiting for a rate cut in April, then in May, then in June. Now it's postponed even more. I guess it will be postponed for the fourth quarter. So all these, the expectation that they will not change their policy anytime soon is what is supporting the dollar. Now, my dear friends, I'm going to zoom into the 4-hour chart, okay, just to see where right now this bounce is holding. So already broken the 61.8 Fibonacci level from the decline that we have seen in April. Okay, so confirm if it sustains this move above the 61.8, then the next ceiling for dollar will be April's highs at the 108 104.82. Let me check the intraday setup. Okay. So rising stochastic, rising RSI. Same stands for the 1 hour and 30 minutes chart. Okay, so there is still a lot of bullish support, even though we are just 6 minutes away from the closure of this candle. Let me also Okay, this is the 14 minutes. You see, I zoomed down to 15 minutes chart just to double check whether the sentiment is still strong to the upside. And it is strong. It's still strong to the upside. Why? Why? You see how huge this 15 candle is. And even though the next 15 minutes, in the latest 15 minutes candle, it showed a pullback, it didn't manage to break or to move below the 61.8 Fibonacci level. So that indicates that bulls are still fighting to sustain the price above the 61.4 104.38 level, above the 61.8 Fibonacci level. 5 minutes to go until this candle closes. Let me just a lot of questions. Yes, last time. Where do I think we'll go from here? If you're asking about intraday setup today, intraday setup, dear Krishna, I will comment later on just for the sake of seeing the closure of this candle. Okay, so I'm gonna get back. Let's move on to the yen. Nesem. Good question. What do you do first when you open the charts? How do you read the charts? First of all, my dear friend, what I'm doing is not opening at all my platform. I'm going to the economic calendar. I open my economic calendar to see what releases we had overnight and what we're gonna have economic releases within the day. Then I switch to a newsletter, sorry, not newsletter, like newspaper, online newspaper, Bloomberg's, Reuters, Barron's, Wall Street Journal, just to keep myself up to date with what I missed overnight when I was sleeping, because in over here we cannot really we have 7 hours. We're 7 hours ahead of the US. So yeah, yeah, so I missed a lot of events overnight. So I'm trying to see whether something happened significant overnight. Then I switch on I open my platform, and how I like to do things is checking all my charts in a daily basis and then chop down. I mean, first daily basis to put some trend lines on, some support and resistance levels on. Um, so checking first to have an impression of the overall trend, if there is one, of my asset, and then I move down to the 4 hour and 1 hour chart to put some trigger points, potential trigger points, breakout points that could help me within the day or even within the week to that will indicate to me that um, it's a possible entry level. Okay, so this is very, very briefly. So don't forget to comment on yen. Yes, let's turn to yen and we're gonna get back to dollar and gold in a bit. So dollar yen, I guess, my dear friend, and actually you're absolutely right, because dollar yen is in the monitor list, I believe, of everyone's for the whole year. And all these rumors and indications about an intervention and etc., etc., etc. So finally breached that 51.52.40. I don't know how many of you were with us on NFP, but I mentioned that there was a statement from an official of Bank of Japan stated that if the yen against the dollar breach 155 territory, the bank and the government will intervene. Okay, that was the statement from I don't remember the name, but it's something in general that the Bank of Japan and the members of Bank of Japan and the government as well, I keep saying that they keep a closer eye on yen in order not to increase significantly, because that will be the time that they will intervene. Intervention of the dollar yen looks likely for the moment, because it broken the previous highs back in 2022, back in 2023. It already broken it. So um, according to the Bank of Japan, they will not. They will try to help the dollar by intervening if they see it breaching or um, attempting at least a move at 155, which, considering the momentum, is it's likely. It's likely. And remember that last week I mentioned that it looks like an order block. So we need to see how this candle will close tonight. If it gets back to the order block, okay, if it comes down to the order block, that could we might continue see consolidation in the dollar yen within this range. So it's a very, very important day, as you understand, for the future of the dollar yen. But always have in mind that that if Bank of Japan announce an intervention, that could lead to a significant correction similar to this one back in 2022, similar to this one back in 2023, and etc. Intervention implies a stronger yen. Okay, so very crucial is the how it will close tonight. Now let's get back to the intraday setup. Okay, what else I wanted to mention about the yen? Uh, this is, if I'm not mistaken, let me just. Can we go back? Yes, look at that, guys. Okay, zoom out. It's in a monthly reading, but just to give you the an understanding on how significant this intervention is just to show you that we haven't seen such numbers, such highs. We haven't seen actually a breach of a break of 152 since 1990. 1990. Okay, 34 years. And this is what happened just now. Just now, extended furthermore, broken the 2 days highs, and pushed back to the 1990 territory, with markets basically alerting that any sign of intervention from the Japanese authorities, government, Bank of Japan, Mr. Ueda, Kishiro, will prop the yen. Will prop the yen. Okay, especially following the data, which we have seen touching the strongest levels in 1990. Very, very, very important. Very vulnerable. The yen is extremely vulnerable to buyers because of the US inflation. This is what happened. Buyers were just expecting for the inflation data in order to buy the dollar yen. And why is that? It's a technique that eventually, with an intervention, they will sell at a higher price. Is that reasonable? So yeah. So what else I wanted to say about the yen before we move on to the 1 hour chart? Um, yeah, that's pretty much it for now. Yeah, so let's move on. Let's move on to the 1 hour chart. So what we're seeing right now, the candle has closed. Actually, this hourly candle and 30 minutes candle has closed. As you can see, significant boost with rising indicators. Actually, all indicators are in line with this bounce. There is a lot of buying pressure apparently. A lot of buying pressure. That was it looks that it was pending orders for and some pending orders on a possible higher inflation today. That's why we have seen that it already breached 152 and broken it, actually 152.50. It breached 152.50. So it's overbought, however, right now, at least in the intraday picture. So we might see some consolidation at this level. Okay, we might see that some consolidation for the time being. Let me just. Yeah. Let me just extend those two. Yeah, already extended above 123, 138. So the very next immediate resistance level is at 152.65. Okay. However, it's already outside Bollinger's, is already looking overbought. Okay, so we might see some consolidation for the time being. Um, yeah, especially if you notice, let me put the 15 minutes chart just to give you a good understanding of what happening. You see, that was the very first 15 minutes of the release. The very next one, we had a huge pullback, so we found a ceiling. Right now, the third 15 minutes candle still a ceiling at 152.50. We cannot really tell yet whether that was as I said, it was uh, it was used by buyers as a target level, and we might see already some cash outs over here at 152.50. Since the dollar is drawing a significant support on the higher inflation, and obviously the higher yields that support the dollar and etc. Um, so yeah, that is this. Okay, the fact that there are reduced bets, let's say, for the total number of rate cuts this year, and actually the rate cuts this year have detected. And from the other hand, we have this alert regarding a possibility of intervention by the Japanese banks and the Japanese government is providing some how can I say that a ceiling, a limited performance to the dollar yen. It's providing some kind of a it's helping basically to limit losses for the yen because we have the minutes as well tonight, so that will it's also expected. So this looks to be that like a ceiling, a limited rally for the time being, especially against the FOMC minutes. But mm, um, for sure, the fact that it has broken the 152 and even extended above it um, is something that that could um, attract further buyers, but it, yeah, but still, from a technical perspective, that's not convincing, neither from the fundamental perspective, because of the fear of an intervention. But it is what it is. So let me check your question. Uh, so questions. Yen, gold. Um, okay. Okay, let's move on. Let's move on. Just to finish with the yen, don't forget to comment on the yen. And I saw in a question earlier. What do you think about the yen? Basically, guys, this is it has been. It's not right. It's not. It's not just today. It has been for like nearly a month now at a very very important area in a lot of uncertainty. Okay, uh, because because even though there is a significant buying pressure today because of the inflation, there is a lot of uncertainty as well on whether the market participants should join this rally, because there is the fear of intervention and we cannot really tell when the Japan will intervene. Okay, so that's also the timing. The timing is causing uncertainty and fear for further rally in the dollar yen. That's why we might see, okay, obviously we need confirmation, but we might see today's closure for dollar yen to um, slow down and on even return back to the month's territory, but expected to pull back. There is a key ceiling for all the reasons that I mentioned that are is a barrier, an obstacle for long and medium term traders to participate to this jump that we have seen just the last 30-40 minutes time. Okay, so that is for the yen intraday. For the time being, in the short term, it seems that it's facing a ceiling, a key ceiling at 152.50. It is overbought, so we're gonna continue seeing a consolidation until it's corrected. But yeah, there's nothing else for the time being, neither a pullback, neither an extension to the upside, just consolidation in the very short term. Keep an eye on your indicators and also your price. If it fails to extend above it and even start consecutively to show negative candles, it could imply to return back to the nearly 1 month ranging market. Now let's get back to the gold, because I promised that we're gonna do that. This is silver, sorry. Gold. Actually, yeah, here it is. Okay, perfect. This is a 15 minutes chart. Okay. Um, uh, I'm gonna get back to the Kiwi in a bit. Thank you very much, Thomas. I'm gonna get back to the New Zealand, antipodians. Because of the gold, antipodians have were in actually were very very interesting lately. Now, gold, back to gold, okay. Okay, let's get back to the 30 minutes chart. As you can see, what I mentioned earlier, guys, remember, if you see a breakout of the support that we have seen, I draw earlier, unfortunately I deleted it, I draw this support level. It was broken, it keeps extending lower, RSI keeps pointing lower, stochastic keeps pointing lower, and actually there is still some there is still steam to the downside because of a strong dollar. So the next already breached the support that I mentioned earlier, the 23.22 level. The very next one is the 23.9, if I'm not mistaken. 23.9 level, which also coincides with the previous bottom back in the 5th of April, basically on Friday. So that's the very next support level. Since we're seeing that there is an increasing selling pressure, if we consider the moving averages, they keep pointing lower. Okay, so the momentum indicators, oscillators show that there is still further room to the downside, that you can see further room to the downside. And let me, out of curiosity, check with my Heikin Ashi setup, to check the gold in a Heikin Ashi with Heikin Ashi candles. Where is it? Where is it? Where is it? Here we are. Heikin Ashi, 30 minutes chart. Boom, boom. No tail at the top in this 30 minutes chart. So what that shows, remember Heikin Ashi theory, if the candle is bearish with no tail at the top, indicates an increasing bearish bias. 30 minutes chart, boom, 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 boom. No tail on the very latest two candles, indicating that sellers are in control for the time being. So I will get back to this setup, just because I want to place a Fibonacci extension, just to find several other support levels in the case that we've seen the asset extending tonight below the 2309 territory. Okay, so here we are. Bum bum. Fibonacci from a fractal to a fractal. So let's see. From a fractal to a fractal, that as the 100 has already broken, and 161.8 it's actually coinciding. Oops, what have I done? Coincides with the bottom back on Friday's session, with the third support of the day as well. So that's a key support level. It's a strong support level. And in the case we see a closure, decisive breakout of the 20th of this area, basically the 2300s territory, we could see the doors being open for here. Double top and double 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 support back in the last week, basically back in Tuesday, Wednesday, and Thursday, and coinciding with the 261.8 Fibonacci level. But this is if and only if you see a decisive breakout and a closure below 2300s, with your momentum indicators supporting further selling pressure, okay? If you see any signs that started consolidating, that the momentum is changing, the sentiment is changing, be careful, okay? So, but let me put it side by side. This is the setup for the 1 hour chart, and this is the setup with Heikin Ashi. Heikin Ashi indicate that there is an increasing selling pressure in the near term. Now, New Zealand dollar, because I promised it, don't know what happened today. Inflation happened. Listen, be careful. It was the most crucial event of the week. We were saying that. Be careful, guys. It's not only the NFP. Markets are already repositioning for inflation next week. We pay attention. Okay, well, Kiwi, antipodians. Where's my antipodians? Hey, ooh, correction, a significant correction, if you ask me. Jesus Christ, I missed that. Well done. Thank you for bringing it up, Thomas. Let me just check the 1 hour chart. That's just, oh my God, Jesus Christ. That's a 642 points a move. It's a big one. It's a big one. It's more than 1% decline in just 5 minutes. 5 minutes, the very first minutes. We've seen more than 1% decline for Kiwi. I will put the daily chart on first just to show you where the pullback led. So that pullback led to the lows of 5 consecutive days. Okay, so it should be somewhere in the mid of this latest rally, latest rebound, let's say. See? Yeah, already actually, and you see this latest bounce. Let me do it right, from bottom to top. So in general for Kiwi, after we are in a long-term downtrend since the beginning, the end of 2023. So since the December of 2023, we are seeing a continuous decline in a down leg. Some corrections we have seen some corrections and ranging markets back in the February and twice in February actually, but it continued, that down leg continued in March and April. March. In April, there was a correction, a rebound to the top, okay, which for 1, 2, 3, actually, yeah, since the beginning of March, so 6 consecutive days in a row, which we've seen it returning more than 50% of these gains just in 5 minutes. The very first 5 minutes of the release. So it's at a very, very important level right now. Okay? Because it's halfway. Remember that a break out of the mid of a rally, not only a rally, of a trend, implies a reversal. We cannot really tell regarding a resumption of this 4 months decline. We cannot really say right now whether this is the start of a new down leg, okay, or whether it's a resumption, the continuation of the 4 months decline. But these weeks or even today's and tomorrow's session will clarify everything. Okay, that's for anyone that is a daily trader. Okay, because remember, a close and a move below the 50% of every trend implies to a reversal. So if we see a close tonight below the 50% and another negative session tomorrow, that could open the doors to the 50, not 59.50, not 59 territory, or even further to the downside, and even a return back to the October 2023 levels. Now, intraday. Let's see. By the way, remember that momentum is also in line with the overall decline, with the overall downwards pressure. MACD has never recovered. It stayed negative actually since January. It went up to the zero, close to zero, but we never seen actually an increase above zero. It's still negative. RSI returned back below 50. It's currently at 43 more precisely. So an overall continuation of this long-term trend is expected if and only if we see a move, a significant move below the zero point 0.6 level, and the round number as well. Now, let's turn into the intraday basis. I'm going to get rid of the Fibonacci just to see what's going on over here. MACD slumped below zero, but the signal line is well above it. That raised some questions. RSI, it's overbought, but flatten at 25. Let me zoom into the 30 minutes chart. Flatten, signal remains above it. There is some support. The asset found some support at 0.60 level. So you need to keep an eye on that. Okay, you need to keep an eye on that area. For the time being, it didn't manage to break it. Okay, it didn't manage to break it. If you see consecutive bearish candles extending below 0.6 territory, then that will indicate that the next support level in the intraday will be another 30 pips lower, and the very next support, it's at the another 30 pips lower. Let me just sorry, give me a second. Boom, boom, boom. Okay, yeah. So let me put the ATR to see where is it pointing. It's at 21. Okay, 21 is what I mentioned earlier. So a break. Let's put the 30-minute chart. A break of the 30 minutes, a break of the round 0.6 level could turn sellers' attention, intraday sellers, scalpers, etc. Possibly another 20 pips lower. That is where there is the confluence of 161.8 Fibonacci level, along with February's bottom as well. So yeah. However, guys, yeah, that's in the very short term, the next few minutes, the next few hours. But in general, tonight you should keep an eye on the 50% that I mentioned, on whether we'll manage to close below 0.60. Okay, so uh, buy because our buyers dominate. Uh, uh, Shasham, we there is not a particular time, but usually is around 12 o'clock GMT, the universal time. But if you follow our actually, if you subscribe on our YouTube channel, you get notifications of all the upcoming events. So we have another four, if I'm not mistaken, for this month. One tomorrow on the tomorrow on the ECB decision with my colleague Mihalis. I'm gonna do one next week as well, and there is another one on the 26th. If you subscribe to our YouTube channel, or if you are an HFM app mobile user, you're getting alerts. If you are following our social media, we have the calendar, actually the upcoming events there. And if you click interested, it will give you a reminder that in an hour we're gonna start, and so on and so forth. For where can I have a private chat with you? Where I don't, I'm sorry. Coquetto, please arrange it with your agent, your account manager. Okay. Get me back in market. The same, it's very difficult to trade the news. It's very difficult, especially such a volatile event such as inflation, NFP, and etc. Make sure that you have predetermined your stop loss level, your target level. Okay, please do so. This is risk management. I guess what happened with you today is that you possibly didn't have a stop loss, or your stop loss was way too high, so you didn't pretty much calculate any potential losses. It's very, very important to have a predetermined before opening any position your stop loss, and to be at an appropriate level that if in any case the market comes against you, you will feel fine with your losses. What I mean, let's say I have 1,000 on my account. For a single trade, I feel okay on a personal level if I lose $50. I will not be okay if I lose the whole balance, $1,000. Okay, so you need to predetermine the stop loss that you have placed. What potential profit and what potential loss might bring in case that the market turns against you. Okay, what matters is risk management, and what matters is at the end of each day, each week, that's based on your goals, to be on profit, or at least if something went awfully bad that week, at least to break even. Stop loss at a reasonable level that you feel okay. Okay, we cannot predict the markets. Okay, so what we need to do is limit as much as we can our risks. The way that you can do it is by having a risk management plan in place. That, okay, for every trade I am okay having a risk reward 1 to 3. I don't want to risk more than 5% of my account for every trade. My goal is every week to place no more than 10 trades, and so on and so forth. These are goals, and these are goals that if you place them down and be disciplined, this is strategy, this is a plan. If you have a plan down, it gives you discipline, and that will help you limit your risks and your losses. Okay. um Okay, basically, you need, my dear Digwas, to understand how this news correlate with the market. What's the impact? It's also good in case that you cannot understand how it will impact the market, or you might, I don't know, might something happen, my inflation today, even we might have seen a vice versa scenario, inflation growing, like, but for some reason dollar was moving down. Sometimes we might see the opposite reaction from the markets, because they were um, uh, because there was there was a lot of pending selling orders in place. There might be something else that we don't know about. So if you don't understand the news, why the news impacted this with this way the data, you need to rely on your technicals. But take it step by step. Try to learn what each indicator, economic indicator, means for the economy of that country, how it could impact the currency of that country. So this is you need to educate yourself. Okay, you need to. There's a free material everywhere regarding trading nowadays. We offer plenty of it as well. So you need to start from the basics. Okay, slowly, in order to understand how the news will impact or might impact the market. Also, support and resistance levels are crucial, because if you are not a trader, like if you're a trader that prefers only to rely on the technicals, then support and resistance levels are the levels that help every trader to find its entry level, its stop loss level, its target level, and so on and so forth. So I don't know your experience, but start from the basics. In this case, because you're asking about the news, start from the basics of fundamentals in order to understand every economic release, what it means for the economy of that country, and how it will affect the currency of that country, in order to understand how the currency will react against other currencies. Okay? So, this is a very, very generic question, dear Fisher. As I mentioned to Dick, was you need to start from the basics. Each trader has its own strategy, which implies to different entries for a buying position or a selling position. You need to educate yourself first, not only because not only because you need to find where to buy in or sell. You need to first find out what kind of trader you are. There are a lot of type of traders: price action traders, day traders, scalpers, um, momentum traders, swing traders. There are a lot of type of intraday traders and long-term traders. There are a lot of kind of traders. So by educating yourself, at least with the basics, then at a later stage to start the demo account as well, in order to practice and see what's best for you, which time frame is best for you, which assets you like trading. That's that's what you need to think first, before letting me know, before asking when is the time to buy or sell, because even that, it has different ways. There are people that they enter a trade as soon as um, they see the parabolic SAR shifting. There are traders that they prefer to enter a trade as soon as the momentum falls below 50. There are traders that if they show the breakout of a bearish pattern, candlestick pattern, they might consider taking an entry. There are traders that, what can I say? I'll tell you. I try to as soon as there are traders that they are trading in a short time frame, such as the 30 minutes chart or even the 15-minute chart. So they decide to take an entry as soon as they see a bearish cross of their fast short-term moving average. So that's a bearish cross. Confirmation came the very next 30 minutes, and with a full body bearish candle, nearly full body bearish candle. So a lot of selling near short term entries might be taken at that point as well. So I cannot really reply. You need to figure out, okay, yourself by educating yourself first with the basics, watching webinars, reading, okay? Neither that or yoga. That depends on your strategy. Do you have a strategy, first of all? Because you should have a strategy. Is your strategy um, a strategy that is applying a particular in a daily in a daily chart? Is it a setup? You have a setup that works for that strategy in a daily chart, in a 4-hour chart, in 1-hour chart, in a 30-minute chart? I cannot tell you because I don't know what kind of trader you are. I don't know whether your setup works for intraday entries, or whether your setup works for a daily trading. You see, have you noticed, guys, that I'm using different setup for intraday and different setup for a daily? So this is my intraday because I have short-term fast moving average, just 5 and 9 exponential moving average, stochastic with settings 533, because this is my intraday setup, my personal intraday setup. For a daily chart, I'm using a daily setup with Bollinger's 15 to 100 moving averages, MACD, that shouldn't be here. I forget to delete every single time. Or for some assets, like the dollar index, I like using a lot Heikin Ashis. Woohoo! And the rally goes on. And the rally, this is dollar, by the way, in the 30 minutes chart, extended, boom, boom, boom. Very next. Oh God, oh Jesus mio. um it's already towards, I don't know how many of you were here when we analyzed dollar, but it's already ready to breach April's 1st of April's highs. And if that happened, my dear friends, the very next resistance level is the round 105 level, 105 30 25 to be more precise as well. That's the very next intraday levels, in case that the rally continues. And for the time being, if we consider the RSI and stochastic, is indeed there is a lot of buying pressure boosting and supporting further the dollar. Okay, bam bam. Next is a potential breakout of April's high. Very, very, very interesting. 50 is over there, pointing higher. It holds above 50 since the mid of March. Stochastic posted a higher low earlier. It keeps pointing upwards. And the very next resistance level is the Fibonacci extension up to a 105.25 level. Very, very interesting. Very interesting, because that takes us back to the August last year highs. So basically to 1 year's highs. Okay, so So you want to trade the news, Shashan. Basically, you need to be aware the time that the economic release will be announced. Okay. In the case of an increase in that economic release, what that means for the currency. In case of a failure, what that means for the currency as well. So what you can do, find the next support and resistance levels and place some pending orders before the news. So if, for example, someone that likes trading the news, let's say, and it has seen, this is the 1 hour chart in dollar, if someone wanted to prepare himself for the US inflation, okay, so by checking what happened the last few hours, basically by placing your 1 hour chart, okay, you could have seen that dollar was moving lower, but for some reason, since Monday, it failed to extend above the 103.95 territory. You see that? So it was in a range between 103.60 and 103.95. So some pending orders could have been set before the release. Some limit orders stating that if dollar breaks above 103.95, so you can place this a bit higher, so you can place it at like 104, round 104, for example, or place limit orders. As I said, limit orders are helpful because you can tell that if in this case a pending order with a buying stop could be placed, buying stop. So what the buying stop means, it means open a long position if the dollar grows above this resistance 103.95, open automatically a long position with stop loss at the bottom of the range and with target number one. If you're gonna place multiple targets, number one, the Friday's high, and target number two, last on 1st of April high. So that huge jump might be also because of pending orders, okay, limit orders, stop orders, etc. Meta gives you this kind of trading, buy limit, stop limit. As you can see, if you place pending order, gives you all these options: buy limit, sell limit, buy stop, sell stop, buy stop limit, sell stop limit. So you get prepared with an automatic a position if the asset kicks a particular level that you have predetermined. And the bullish momentum continues. It seems that 105 will be kicked soon. Considering the momentum, considering the RSI, considering how strong these candles are. You see how strong they are? No tail at the bottom, keep rising, already breach 100, the 1st of April's high, moving average are keep pointing higher. So everything is in line with increasing. Actually, that bulls are in control. Simple as that. Bulls are in control. Look at that. Boom. That's the daily candle. So, no, these live analyses are not daily, but we're trying to do one twice a week. Okay, twice a week on such important events such as this one. Someone asked about the Canadian news. The Canadian news, where was the question? Where was the question? What do you comment about Canadian news? Okay, let's check. Actually, as you can see, my dear friend, it seems that the Canadian news don't really dominate the market. Right now, what dominates the market, it was the inflation data, and that's why we've seen all of these dollar strength moves rather than Canada. There is no weak cut. This the boost of dollar cut to the upside, it doesn't imply to a weak Canadian dollar. It's basically a strong US dollar. This is what we are seeing over here. So the Canadian dollars, the Canadian news, sorry. So basically, Bank of Canada kept rates unchanged. That was expected as well. So it was fully expected considering the latest economic data from the um, um, from the Bank of Canada. The market was pricing in for a long time now that there is no chance for a rate cut today. So I think it was 82% were pricing that it will keep the rate unchanged. Okay, that's why we don't really have a reaction of Canadian dollar, but we have a strong US dollar because of inflation. So rates unchanged, clearly impacted, today's trading clearly impacted by strong dollar rather than a weak Canadian dollar. Let me check the scenarios. Basically, the central bank is waiting to see. Um, it remains data dependent, right? Like the rest of the central banks. Uh, Growth is looking to be peaking. Let me check. Uh, they keep focusing, like the rest of the central banks, on the supply and demand in the economy, on the inflation expectations, on the labor market expectation, the wage growth, in order to take a decision to rate cuts. So, rally, the dollar cut in general has been in an upwards channel for since the beginning of the year. Let me let me fix it. Should be 1.5 standard deviation. Perfect. That looks much nicer. You see, consecutive kick in the top, consecutively kicking the bottom. So it's in an upwards channel with a tiny slope. Okay, so the fact that it breached the top right now of the channel, okay, indicates that we might see a pullback to the mid of the channel soon, but it's too early to tell. Okay, yeah. So if you notice a pullback away from the top of the channel, then the dollar cut might return back to the mid of the channel, and so on and so forth. Remember that in a channel, a test of the top implies to a correction back to the bottom. A breach of the bottom implies to a rebound. In general, it's a very small slope, so there is not a lot of momentum, let's say. What else? Any questions? Any other questions before I call it a date? No. Okay. So, guys, I'm gonna end the session. Dollar is the strongest currency so far. Gold has actually extended and in return decline and return some gains. As I mentioned earlier, for anyone that was watching, the pullback that we saw today doesn't imply to a reversal of the overall trend, as long as we don't see the gold returning below the 2250 territory. A move below the 2250 will be an indication of a reversal of this. Actually, let me just put vice versa. But fundamentals are still supporting a strong gold and a strong dollar, but a strong gold as well. So immediate support 2280 level. Okay, 2280 level. And that looks to be a bit of a correction on the strong dollar. You can see that momentum is keeps rising. The overall outlook hasn't changed. So intraday, this pullback indeed, it was due to the strong dollar, with the next support level, as I mentioned earlier, the round 23,000 level, 2300s level. So thank you very much for watching. Don't worry if you missed anything, if you came here late and etc. The live stays. Okay, the live anyway stays in the YouTube channel, in the Facebook channel, in the LinkedIn, Twitter channel, so you can take your cursor and move back and, and forward on the actual video to see everything that we covered today. Okay, and the initial analysis for gold, the initial analysis for yen as well. Let me just double check. Ooh, keep rising, keep rising. So still some keeps rising. Start worrying whether actually the Bank of Japan might intervene this week, because this looks to be at a very significant. It looks to be a significant rally. Sorry for all this mess, but guys, the fact that it broken the 152.50, that turns the attention to 153.50 or even higher. But be very careful, because they can intervene anytime. Okay, very, very hot asset right now. Very hot asset. The fact that it broken the immediate ceiling that I told you about earlier, it gives the impression that there is further steam to the upside, to even 153 level or even 153.50 level. So be very careful. Thank you very much for watching. Have a great day ahead. Remember that tomorrow we're going to have another live analysis with me, Havlis, covering the ECB decision, European Central Bank decision. We also have PPI data from the US tomorrow. So the Mihalis will try to discuss everything. It's expected to be another volatile day, because we're gonna see ECB, we're gonna see the PPI from US, we're gonna see inflation from China as well. What else? And jobless claims as well. So it's expected to be another volatile day. Okay, be careful. Thank you very much for watching. Hope that session helps you. Anything you need, we are here to help. Don't hesitate to contact us at webinars@hfm.com, or check with your account manager whether let your account manager know, and it will pass your questions to us. But in any case, you can send us an email at webinars@hfm.com. Thank you very much. Have a great day ahead, and see you again tomorrow.